This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on March 4th, 2016. Our time is 8:43 Mountain. Our radio show runs on 6:30 CHED in Edmonton, normally Sunday afternoon at 3. Today, we are on prior to the Oilers Face-Off Show. Oilers, Winnipeg Jets at 5 o'clock. Face-Off Show, pregame, right after our show at 3:30. Good luck to our Oilers as they play the Jets. Don't forget, if you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast as well, the podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. Harold's website is rarecoloreddiamonds.com. Rarecoloreddiamonds.com, 1-800-432-1022. Our featured diamond of the week is a 1.30 carat cushion cut fancy light blue diamond. And this is a beautiful diamond ring. You can see it online at rarecoloreddiamonds.com, featured diamond of the week. If you'd like to be on the same page that Harold and I are, seeing all the material that we gather and read through and present to you on the radio show, it's our World Financial Report on Radio newsletter. We'll be happy to send it out to you via email free of charge every week. Absolutely free. You can go through it in minutes, be completely up to date for the week, or spend hours if you choose. Connect with Harold, get the newsletter, rarecoloreddiamonds.com, 1-800-432-1022. As we tape today's program, U.S. jobs numbers coming out on a Friday morning. They gained 242,000, and they kept the unemployment rate at 4.9%. Wages, though, went down. Not a good sign. Also, 94 million people in the United States not in the workforce. Canadian job numbers come out next week. Jim Rogers, billionaire, coming out on Bloomberg this morning saying 100% probability of a U.S. recession within a year. One of the other stories that was quite interesting in our free weekly newsletter, in Japan, we've been talking a lot about negative interest rates in Switzerland, some of the Scandinavian countries like Sweden. Japan, for the first time, they actually sold bonds, 10-year bonds, with a negative yield. Think about that, Harold. For 10 years, someone is tying up their money at a negative rate of return. You are paying them for 10 years to have your money. The times that we live in, it's unbelievable to the financial mind what we're seeing out there.
That is crazy. I mean, who in the world would ever invest in an investment like that? It's crazy. But it's happening all over the world. Again, Europe is in disarray. Europe's in big, big trouble. That's why the markets are so volatile right now. They just don't know which direction, to head in. We've seen a massive rally in the price of gold over the past month. In fact, the price of gold has gone from $1,050 to $1,275, and nothing has dramatically changed in the market in which to do that. For example, we always watch the relationship between gold and the U.S. dollar. The stronger the U.S. dollar is, the weaker gold is. The reason that gold got down to $1,050 was primarily because the U.S. dollar had broken par. So now we're back to about 97.10 on the U.S. dollar. So that's where we're sitting right now. The fact is that the U.S. dollar has come down about 3 cents only, but the price of gold has actually gone up about $275. A lot of that is to do with the fear factor. And by the way, there's no way that we don't see the U.S. dollar not only breaking par again, but going substantially higher. So, the fact is that you've got speculators in the market right now. That's why oil prices have risen $10 from their low, which has helped the Canadian dollar. So as we've always spoken about, there are direct correlations between currencies, gold, oil, different commodities. And as far as Canada goes, because Canada is so tied into the commodity markets, mostly oil, when oil dropped down to the lows that we saw a few weeks ago, that's what pushed the Canadian dollar down to 68 cents. So now we're trading right now at about 72, 73 cents in the Canadian dollar. Do we feel that all of a sudden things are getting better in Canada and the Canadian dollar is going to rally? Unfortunately, no. Because the fact is there is still a gigantic glut of oil on the market. And we know that OPEC is not coming to a conclusion as far as cutting production. In fact, that's not going to happen. So what we're seeing right now, and I don't want anybody to be confused about this, because again, a lot of times we look at the market and think that we've seen the market bottom out, and we want to try to buy the market as close to the bottom as we can. When oil hit, basically down to around $25, what that caused was the speculators to come in. Nothing changed. All of a sudden, it wasn't a shortage of oil or OPEC didn't decide to cut production. All we've seen is speculators come into the market to make some short-term money. My personal belief is that oil's got to come back down. There's still oil being sold in the Middle East for under $25 in the $22 range, which means that should be the benchmark price for oil at this particular time. So I have to stick with my predictions because, again, nothing has really changed at this point here to get me to change my thinking. The fact is that the U.S. dollar will still remain the strongest currency, and that will happen for quite a while. So I do anticipate that the next rally in the U.S. dollar will break par again, and then we'll start to see it start to get to the 101.50 level, 103, and ultimately to 108 to 110. And the reason for that is that no matter what, the U.S. economy is still better than any other economy out there. Europe's in total disarray, as is China and Japan. And obviously, we have our issues in Canada, low, again, oil prices and the Canadian dollar and just the overall state of the economy. So please don't get lulled into a false sense of security. Gold is not going to rally above 1380 at this point. And again, from 1050 to 1380 is a huge swing. That's a big move for gold. But the bottom line is that 1380 is the most important price for gold, and we would have to see two closes above that in order for us to be convinced that gold is going to go higher. Still, there's major short positions in the market. That means that the Commitment as Traders report that comes out every month is showing that there's a building short position in the market. And every time we've seen this happen in the past, the gold market has dropped because of it. And basically, who controls the short position are the major banks. And believe me, the banks have always made money by shorting gold and silver. So at this particular point, we're starting to, in my opinion, come close to the end of the rally in the gold market. In fact, more aggressive traders will start to short the market. Another thing that we need to know at this point is that something that is going to shock a lot of you. This actually just came out. I didn't even get a chance to send it to Randy, but this is extremely important. This came from Ottawa. The Canadian government has nearly completed a gradual sell-off of its gold reserves and its holdings of precious metals. Now the amount is just a few dozen ounces. Listen to this. Data from the World Gold Council suggests Canada stands apart from its industrialized peers as the only G7 country without a stockpile of at least hundreds of tons of gold. The Federal Finance Department says Ottawa unloaded, listen to this, nearly 22,000 ounces of gold coins in February for about $35 million. The department says the government now holds, and this is crazy, just 77 ounces of gold valued at about $130,000. A department spokesman says the government has a long-standing policy of diversifying its portfolio by selling physical commodities like gold in order to invest instead in assets that are more easily traded. Former senior finance department bureaucrat Don Drummond says he doesn't think it makes any sense for Canada to hold any gold because it hasn't delivered a good rate of return over time and it costs money to store it. Well, what happened when gold went to $1,900 back in 2011? I just don't understand that comment. Drummond says that hundreds of years ago, gold symbolized the wealth of a country. Canada has been gradually selling from its gold stash for decades, and in recent years, the government has increased its holdings, and listen to this, of U.S. and British currencies. In February, the U.S. held about 8,133 tons of gold, which made up 72% of its reserves, according to the World Council. The Gold Council also said Germany had 3,381 tons for 66% of its reserves last month, while Italy and France each held more than 2,400 tons, over 60% of their respective reserves. So Canada has sold off almost all of its gold. And where did they put their money? In U.S. dollars and British pounds. So the fact is that we've been saying the gold was going to drop to 1,000. We came to 1,050. I still believe 1,000 is the number. Again, with all the fear in the world right now, I don't think the gold is going to go below 1,000, but there is fear in China. There is fear financially in Japan, as we know. Randy just reported that. And there's fear all over Europe. In actual fact, just look, and what I'm saying is 100% true, that the U.S. stock market will go to 20,000. It's at 17,000 now. It may have been volatile and been dropping, but the fact is that the U.S. stock market is still a strong market, stronger than any other stock market in the world. And again, even though it doesn't warrant it, and we know that the markets are manipulated, the fact is that the U.S. market will probably go to 20,000 before it would go to, 10 or 12,000 type of thing. So, again, I still believe the gold, unfortunately, is going to come down, and I think the next time it comes down is the time that we're going to start to buy it. I don't believe that this rally has any wheels at this time, and again, I do believe that the American dollar is going to continue to strengthen, and obviously so does the Canadian government. Otherwise, they wouldn't be putting most of their assets into U.S.-based investments, mostly U.S. dollars.
1-800-432-1022. 1-800-432-1022. Obviously, we're in very interesting times. Negative interest rates around the world. We have talk of, and this is for some people almost hard to believe, and that is cashless society. And that talk is really starting to build. In fact, Harold plans on putting together a seminar, and we'll have it online. You'll be able to take part in it. It will be free of charge, and it will be about what you do in a cashless society. Connect with Harold at rarecoloreddiamonds.com. Learn about investing in hard assets. In a world of negative interest rates, potential cashless society, now is a time for hard assets. Now is a time for an insurance policy in your portfolio. 1-800-432-1022, rarecoloreddiamonds.com. Rarecoloreddiamonds.com, our featured diamond of the week, and we'll talk about diamonds in the second half of the show, is a 1.30 carat cushion cut fancy light blue diamond ring. See it online, rarecoloreddiamonds.com, featured diamond of the week. And yes, I did read this week the story about, obviously here in Canada, that we were selling gold. We didn't have a lot to begin with, down, as Harold was saying, to 77 ounces. And the great story, though, and you can find it in our newsletter, is that central banks have extended the longest gold buying spree since 1965. Other banks around the world, Russia, China, Kazakhstan, they're hoarding gold. In Canada, they're getting out of gold. We didn't have a lot to begin with, but we are, I guess one could say, almost completely out at this point. One of the major stories from our free weekly newsletter, and it's an eye-opener. The world economy stands on the cusp of another crash, that according to Lord King. Now, Lord King is the former Bank of England Governor, Lord Mervyn King. He has warned that the world is on the cusp of another crash because regulators have failed in their attempts to reform the financial system in the wake of the last crisis. Another crisis is certain, and the failure to tackle the, as he calls it, disequilibrium in the world economy makes it likely that it will come sooner rather than later. He has put out a brand new book about it, and I'm sure you could buy it online. Since the last crisis, governments and regulators have been very hyperactive at the national and international level, but bankers and regulators have colluded in a self-defeating spiral of complexity. But here you have a former Bank of England governor Lord Mervyn King coming out and saying the world is on the cusp of another crash. A strong statement. As well, coming out this week, Credit Suisse saying a fresh recession will cause a Eurozone collapse. That's right, collapse. That according to Credit Suisse. A recession in Europe will lead to the collapse of the Eurozone as the single currency would buckle under the political turmoil unleashed by a fresh downturn. A leading investment bank has warned in a research note titled Close to the Edge. Economists said Credit Suisse warned the fate of monetary union in the EU hangs in the balance if Europe's policymakers are unable to ward off another global slump and quell anti-euro populism. The visibility of the euro is contingent on the current recovery, according to Peter Foley at Credit Suisse. If the euro area were to relapse back into recession, it is not clear it would endure, although the bloc's nascent recovery was likely to persist in the coming months. Credit Suisse says there are definite worries and signs of deterioration emanating from Europe's economies. These include an industrial slowdown, heightening credit stress in the banking sector, and market volatility. And here we have today Jim Rogers, billionaire, hedge fund, obviously a person in the money field, in the financial field. He used to work with George Soros, coming out and saying within the next year in the United States, 100% probability of a U.S. recession. If the United States goes into recession, you can pretty much guess that, yes, you're going to see Europe go into recession as well. And Credit Suisse saying you could see a Eurozone collapse. One of the other quotes that we have in our free weekly newsletter, this is from Egon von Greyers, and it really tells the tale of where we are at. Since the creation of the Fed in 1913, world debt has gone from virtually nothing to $230 trillion. And that doesn't include unfunded liabilities, which are in the hundreds of trillions of dollars, plus the derivatives of 1.5 quadrillion. And of course, Harold has talked about derivatives for a long time. So we are living in a bubble that could initially expand by quadrillions of dollars through unlimited money printing by governments in a futile attempt to save the current system. But it is, of course, not possible to solve a problem using the same method that caused it in the first place. Exponential money printing will destroy virtually all currencies and create anarchy at all levels of society. Money printing will only exacerbate the problem, not solve the disastrous crisis the world is heading into. Therefore, after the hyperinflationary period, there needs to be a deflationary implosion that totally extinguishes all debt. As debt implodes, so will all the assets that the debt has driven to astronomical highs. Although this process may take a while to play out, it could also happen a lot quicker than any of us imagines. Once a bubble of this magnitude bursts, it's impossible to understand the extent of the consequences, both in time and magnitude. And Egon von Greyer is an advocate of holding hard assets in your portfolio. He believes that's probably going to be one of the few saviors if we get into a deflationary crisis. And I know that reading material this week that is one of the great concerns on the minds of many right now in the world, and that is deflation. Harold, it is a time to be concerned. As we've said before, it's not so much how much you're making, but are you protecting the wealth that you do have today? And that's where we believe hard assets come into play.
You bet, Randy. Again, it's all about capital preservation right now. Right now, it's almost impossible to make money in almost any market. Stock markets are very volatile and risky. It's total speculation. Anybody who has their retirement savings plans in there should be extremely worried. On top of that, all the markets are crazy. You're getting 1% in the bank. Stock markets are risky. Commodity markets are risky. So the fact is, where do you turn today? How do you make any money? It's extremely difficult unless you're going to speculate, and the fact is most people don't want to do that at this particular time. So capital preservation is the most important thing. Why in the world would anybody want to buy a bond if you're going to lose money on it and hold on to it for 10 years? It makes absolutely no sense. Why would anybody want to keep their money in the bank if the bank is charging you to keep money in the bank? The only reason you would keep some money in the bank is to pay bills. Aside from that, nobody's going to keep their money in the bank. So how are the banks going to do better? How are they going to recover? How's that going to help the economy? I guess the banks and the government feel that if they force you to take your money out of the bank, that you're going to spend it. And that's what they're hoping for. They're hoping that people are going to look at negative interest rates, not want to pay to keep your money, warehoused in a bank type of thing, and are going to spend it. But that's not the way things are going right now. Just look at the number one retailer in the world, which is Walmart. As the expression in the United States goes, as goes Walmart, as goes the U.S. economy. And right now, Walmart is closing 236 stores. They're not doing great business at this particular time, and a lot of people cannot afford to even shop there anymore. They're going to the dollar stores. So the fact is that things are terrible everywhere. To look to make money, it's extremely difficult. To own gold, not to trade gold, is a very important thing because, again, over the long run, there's no doubt that gold is going to go much higher. If you're all watching the circus, which is the U.S. Presidential races, you're going to realize that if Donald Trump or if Bernie gets in, the fact is they're saying that the U.S. will go into a recession for several years. But the fact is the U.S. is on the verge of a recession right this second. So, again, things are just extremely difficult, extremely volatile, and very, very risky. Now, I've been in business 35 years. I've owned one of the largest brokerage firms, commodity brokerage firms in the country, and my radio show has been on for over 20 years. I know these markets extremely well, and most of my Canadian clients have done extremely well with those over the years. We first started buying gold when it was at $250 back in 2000 and ran it all the way up to $1,900. We bought oil at $18 and ran it all the way up to over $150. So the fact is that I've traded the commodity markets for more than half of my life, and I tend to know those markets extremely well. We do have investments, private investments with my company that are diamond related that are returning over 25% a year. So my clients are doing extremely well, and these investments are reserved especially and strictly for our Canadian clients. So if you're having troubles right now financially, if your investments aren't working out and you're concerned about how to make money in the future, give me a call. There's no doubt that I will sit down with you over the phone and I will go over your personal financial investments that you have, let you know which ones I think you'll do well with and which ones are risky and you may want to exit. And again, if you're interested, we do have private investments that are related to my firms only that have been doing extremely well for our clients for many, many years now. These are totally for our Canadian clients only. And again, if you're not making well in your private investments at this point, you need to speak to me. I'll sit down with you and explain what's going on in the world, what will happen with your personal investments, and make some recommendations. So hopefully you can not only preserve your capital, but do extremely well. Making money today is very difficult, but my Canadian clients, and the reason that we do this, have been with me since I started in business back 34 years ago. So the fact is that I pay my clients back. They've done well with me. I've done well with them. And again, we have investments at this point that are returning over 25%. If you're not doing as well as that, you may want to give us a call, and we'll sit down and explain what we're doing, and hopefully it'll be to your interest. So again, things are very, very volatile right now. I would not go into the stock market for anything with anybody's money. It is the most dangerous place to have your money at this point, and most Canadians that have money in retirement savings plans have not made money for 10 years now. Again, that should say a lot about how you're investing your money. So if you're not doing well in the markets and you need a second opinion, please give me a call. I'll spend as much time with you as you need to try to help you get to where you need to go.
1-800-432-1022. Take Harold up on his generous offer. He'll be happy to speak with you personally, privately. The call is free, and obviously what's discussed between the two of you is confidential. 1-800-432-1022. RareColoredDiamonds.com is his website. Our featured diamond is a 1.30 carat cushion-cut fancy light blue diamond. See it at RareColoredDiamonds.com, featured diamond of the week. It's interesting to note job numbers coming out in the United States, and they gained 242,000. Unemployment rate stayed at 4.9%. Wages went down, though. And even though you have this, what they classify, although people don't believe the employment numbers in the states, food stamp use is at a record high in the United States, despite this quote-unquote low unemployment rate. We have a story in our free weekly newsletter about that. You can read it. Get our free weekly newsletter from Herald, 1-800-432-1022, RareColoredDiamonds.com. But you supposedly have 4.9% unemployment in the United States, and yet they have a record number of people on food stamps, close to, they're saying, 48 million people. We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on March 4th, 2016. Our time is 9/11 Mountain. Radio show runs normally 3 o'clock in the afternoon on 6:30 CHED on a Sunday, but today we started at 2:30. The Oilers are playing the Winnipeg Jets at 5 p.m. The Oilers face-off show coming up at the bottom of the hour. Pre-game show, face-off show, Oilers Jets, 5 o'clock, and the pregame right at 3:30. Connect with us at RareColoredDiamonds.com. It's like going to a museum online and seeing the world's finest investment diamonds. RareColoredDiamonds.com, 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week is a 1.30 carat cushion-cut fancy light blue diamond ring. And this is an absolute beauty. When you take into account what's happening around the world, and as we reported off the top of the show, in Japan, they sold 10-year bonds at a negative yield for the first time. The Japanese government got paid to borrow money for a decade. For the first time, they sold $19.5 billion of debt at an average yield of about 0.2, actually it was 0.02% on Tuesday. So it's just absolutely unbelievable, the things that are happening in the world today with cashless society talk. You have negative interest rates in Sweden, obviously Japan, talk of it happening in the United States. Harold, that's why people are looking at hard assets, diamonds, gold, silver, artwork, cars, collectibles of any sort, because you at least you have something that's going to maintain its value over time. Unlike what they've done in Japan, they are basically, you've guaranteed a loss for yourself for 10 years on that money that you've invested.
Again, it's absolutely insane to think that anybody would invest that, tie up your money for 10 years and end up with less money than you actually put into the investment. I don't even know why they would even bring that up. Nobody would be stupid enough to do something like that. So, again, it's insane to think that all the problems that were caused prior to 2008, which is when the world really changed financially. Then we found out really what was going on with the banks and everything. They were giving out liar's loans. They were selling these loans off to foreign countries, which the numbers were so gigantic that basically it hurt every economy. And the fact is that the banks here in the United States, a lot of them are still holding this debt. That's why the banks are not doing better. And in actual fact, if the banks are going into negative equity, into negative interest rates, and nobody's really going to keep their money in the bank except to pay bills, I just don't see the future of the bank being strong. Interest rates are at almost zero. The fact is that it's very difficult to get a loan. You've got to have a tremendous credit rating in order to get a loan. In order to buy a home in the United States today, you've got to put up 20-25% or more and have a fantastic credit rating. So the banks aren't doing any business, and that's obvious just by the fact that their stocks have never recovered from when the market plummeted in 2008 and 9. So alternative assets that are not stock and bond and paper related, are where most of the money is going to right now because they're safer. We talked about capital preservation, preserving your capital to wait for other opportunities when the markets do, start to recover. So the fact is that there are certain investments that will do that for you and actually not only preserve your capital, but also make you money. And one of those investments is rare colored diamonds. Certain diamonds, not all diamonds, are amazing investments. Certain diamonds will never lose their value, will never decline in value because the fact is that there's so few of them available. And the fact is that, we talk about what's happened with blue diamonds and what's happening with pink diamonds and yellow diamonds and soon to be green diamonds. These are amazing assets that are not affected by stocks and bonds type of thing. In actual fact, what we have proven is that rare colored diamonds are a tremendous hedge against currencies going bad. Just look what happened with the Canadian dollar. The Canadian dollar, which was at par with the U.S. dollar several years ago, recently has been down as much as 40% or more. And the fact is that most of my Canadian clients that purchased diamonds when the Canadian and American dollar were at par or close. And now the fact that the American dollar is substantially higher, almost 35 to 40% higher, our clients have made a fortune just on the currency alone, let alone what the diamond has gone up in value, but the currency has also made them an awful lot of money. And that's why owning diamonds is such a valuable and important asset to own. And as I mentioned before, it's not all diamonds. In fact, most white diamonds are not considered investment quality unless it's a deep flawless of tremendous color and that type of thing. Those are excellent investments, but yellow flawless diamonds, argyle pink diamonds, blue diamonds, there's different colors of blues, there's different colors of yellows, there's different colors of pinks. When it comes to blue diamonds, and the reason I'm talking about blues is that we're featuring a blue diamond today that is absolutely spectacular. It's over a carat. It's a magnificent diamond. The color is spectacular, and we put it into a phenomenal ring, so it's surrounded by pink diamonds. In actual fact, the ring setting alone is worth a small fortune. It's an amazing asset. Now, in blue diamonds, there's faint, there's light blue, and then there's fancy light. When you're buying colored diamonds, you want to deal with the fancies. Otherwise, the other diamonds do not have enough saturation in order for that diamond to really be considered a strong asset. So when you start to get into, for example, the blues, because they become very, very expensive, you've got the fancy blues, you've got the fancy intense blues, you've got the fancy deep blues, and then you've got the most expensive of all, which are the fancy vivid blues. The fancy vivid blues have got the highest saturation of color, so consequently, they're the most expensive. They will go up the most in value because of the color saturation. So basically, back in 2005 approximately, you could have bought a vivid blue diamond of good color saturation that maybe was a good cut and a good clarity over a carat. You could have bought one for about $200,000 to $300,000 a carat. However, the price of blue diamonds, especially vivids, have increased so much in price that a couple years ago they reached $2 million a carat, from $200,000 a carat to $2 million a carat on a high quality vivid blue diamond. Then recently, a few months ago, a 12 carat vivid blue diamond called the Blue Moon sold for $48 million. It was 12 carats. Well, you do the math. 12 carats at $48 million shot that vivid blue diamond up to $4 million a carat. So again, in this particular case, I'm talking about extreme diamonds. I'm talking about one of the rarest diamonds in the world that basically has increased in value tremendously. However, Anybody who has owned blue diamonds of good saturation and good color over the last 10 years has done extremely well. Now, what will affect the price of a diamond, a colored diamond, first of all, is the saturation, how deep that color is, and vivid is the strongest color of all. But then you've got the cut of that diamond, and the cut of a diamond will also consequently affect the price of that diamond. Now, round and emerald cuts are the rarest cuts in colored diamonds, rounds being the rarest of all because they're the most difficult to cut. In actual fact, a round colored diamond can be way more expensive than almost any other colored diamond. Then comes the emerald cuts. Emerald cuts are extremely difficult to cut because they're also known as step cuts. There's different levels to it. And then the clarity of the diamond, which means is the diamond internally flawless? Is it a VVS1? Is it a VS1? Is it a VS2? Is it an SI1? The only diamonds that are flawless are obviously flawless and internally flawless diamonds. Even though a VVS1 is of a tremendous clarity, it still has a flaw. Now, in most cases, nowhere near close to visible with your naked eye. So a high-clarity colored diamond will increase the value of that diamond substantially. And then the carat weight. The carat weight is also important. You know, diamonds that are over a carat become extremely valuable. A diamond that is over 2 to 3 to 5 carats becomes even more valuable because only one diamond in about 15 million is over 2 carats. So obviously a 2-carat colored diamond is a rare diamond primarily because of the size of it. And then when you start to get over 5 carats, that's when those diamonds can take on a life of their own because they're considered extremely large. So obviously that 12-carat vivid blue diamond, the Blue Moon, that sold for $48 million, it had everything going for it. It was the best color, which was vivid blue. It was the highest clarity. It was internally flawless. It was a very rare cut, and obviously the size of it was over 10 carats, and that's why that diamond sold for $4 million a carat. Most diamonds would not reach that level. Now, when you look at what's happening at auction recently, it's not only the very rare expensive diamonds that are selling for fortunes, but so are other diamonds, mid-price diamonds. Randy and I have noticed at Christie's and Sotheby's sales that the yellow diamonds that are in the 4 to 5 carat range, they don't have to necessarily be flawless. They could be canary color or fancy intense, but those diamonds have done very, very well at auction. They've actually done tremendously well. In fact, you know, some of them turn out 200 to 300% more than what the actual experts at Christie and Sotheby's are. Again, all in all, we feel that with the currency markets the way that they are, with the stock markets as risky as they are, with everything around the world basically being risk of very low returns, it makes a lot of sense to own rare colored diamonds. Fancy yellow internally flawless diamonds can go up by 15% a year unless they're vivid in color, and vivid, which is the highest saturation, could actually go up more than that. In fact, it's very difficult today to get a very high quality, vivid yellow flawless diamond. The diamonds that we feel will go up substantially over the next 5-6 years will be the Argyle pink diamonds. 95% of the pink diamonds in the world come from the Argyle mine in Western Australia, and that mine is getting ready to close. So the fact is that we feel that because there will be no more or hardly any pink diamonds left, that the price of pink diamonds can go up substantially over the next several years. And the closer we get to the mine actually closing down, which is scheduled to close in 2020. And what I'm saying is the closer we get to the mine closing, the more these diamonds will go up in value. These are the pink Argyle diamonds. And then what's going to happen is when the mine closes and there's no more diamonds coming out of the mine, give it 2 years for basically all the diamonds to run out, we feel the pink diamonds from the Argyle mine could turn out to be one of the best investments that our clients made. Now, if you happen to own a vivid pink Argyle, this is extremely important. The vivid pink Argyles have got the highest saturation of color. But just because it's vivid in colors, there's 10 different shades of vivid. The highest saturation is going to be worth the most amount of money. Now, what we'll also add to it is what type of cut is it? Is it round? Is it emerald cut? Or is it square cut? The cut will definitely help determine the value of that diamond. And then on top of that, the clarity will have something to do with it, even though in most cases Argyle pink diamonds are graded more on their color than they are on their clarity. Then the other thing that has a big impact on the diamond is the size of the diamond. It's important that you understand that 95% of the pink diamonds that come out of the Argyle mine are under a quarter carat. These are small diamonds, but they're considered the most valuable assets on earth, even though they're small. So a quarter carat pink diamond, again, 95% of the Argyle pinks are a quarter carat or under. So then you get to a half a carat diamond. And those diamonds become more valuable because they're twice the size of the majority of the diamonds that are coming out of the Argyle mine. So a half a carat is considered a large pink diamond, much larger than 95% of the diamonds that come out of the Argyle mine. So we feel that a diamond that's over a half a carat, that's one of the price breaks that you're going to get. Diamonds that are over a half a carat will go up more than smaller diamonds. And then you start to get to the 1 carat diamonds. And those are extremely rare. Very seldom will you see a 1 carat Argyle pink diamond. And then if you could ever get a 2 carat diamond, that's an Argyle pink, you've got one of the largest diamonds ever come out of the mine, and those are more expensive than obviously the smaller diamonds. Every year the Argyle mine holds an Argyle pink diamond tender, where they take their best diamonds that have come out of the mine that year, and they take them all around the world and show them to top dealers and jewelers, and that's how those diamonds are sold, by private auction. And basically those diamonds that come out of the Argyle mine that go to the Argyle tender start at a half a carat and go up from there. Well, we have found lately that we're coming close to the end of the mine's existence, that even the mines that are even the diamonds that are heavily included, that you can see the flaws with your visible eyes, they're still selling for record prices. So we believe that the Argyle pink diamonds are a rare opportunity that our clients can make a lot of money with. Again, you can get involved in these diamonds starting with fancy light pinks, then go to the fancy pinks, the fancy intense pinks, the fancy deep pinks, and then the most valuable and expensive of them all, which are the fancy vivid pinks. These are, in my opinion, about the best investments you could make at this particular time. And with the Argyle mine closing in less than 4 years, we believe that the price of these diamonds will increase substantially over that period of time. So again, Randy, we're just ecstatic about what's happening in the diamond market. And by the way, the featured diamond this week is an extremely rare and beautiful blue diamond that not only is a gorgeous diamond to put on your wife's finger so she can enjoy it and wear it, it's a phenomenal investment that over time will go up in value.
1.30 carat cushion cut fancy light blue diamond ring. It's stunning. See it online. Featured diamond of the week at rarecoloreddiamonds.com. rarecoloreddiamonds.com. As we touched on, in the world today, there are $8 trillion worth of government bonds with negative interest rates. Japan sold for the very first time 10-year bonds, negative interest rates. We had on last week's show, in Japan, as a reaction to negative interest rates, people are buying safes. And in fact, there's a run on safes in department stores and hardware stores. They're selling out. That's what you're finding is happening in Japan. We obviously believe that now is the time to look at hard assets like diamonds, gold, and silver to invest in during these very confusing times. In fact, it's so confusing, and we have this quote from our free weekly newsletter, and it's quite telling, I think. It's from Russell Clark, and he is with the company Horseman Capital Management. He says, "The future for me is now more uncertain than at any time I can remember." Or to fully quote the chairman of the board from the movie Margin Call, "I'm here to guess what the music might do a week, a month, a year from now. That's it, nothing more. And standing here tonight, I'm afraid that I don't hear a thing, just silence." Anthony Limerick, another quote, 36 South is a company he's with. You have the 4 horsemen of economic apocalypse. They're out there. Aging baby boomers, tech disruption, as we're seeing with companies like Uber, a globalized labor market, and massive, massive debt. As Egon von Greyers was quoted as saying earlier in the show, $230 trillion worth of debt in the world today, not counting the derivatives of 1.5 quadrillion. But this is why you need to be in hard assets. And we're getting to that point where it is time for the auction season to kick off again with Christie's and Sotheby's. And in our free weekly newsletter, we have the top 10 jewelry items from 2015. And guess what? Pretty much all of them were rare colored diamonds that Harold would have you invest in through his company. In fact, number 10 was a rectangular cut colored diamond, a 5 carat, and it sold for, and this is a pink diamond, $10.7 million. Number 9 on the list was a colored diamond, a pink diamond, 9 carats, sold for $12.6 million. Also on the list, and this is one that is absolutely gorgeous, number 7, a purple pink diamond ring, 8 carats, sold for $13.8 million. Number 6, a historic pink, 8.72 carats, sold for $15.9. I'll skip over 5. I did skip over number 8 because they're not diamonds. Number 4 on the list was an emerald cut, and this is a white diamond, 100.20 carats, sold for $22 million. Also, number 3, the Sweet Josephine diamond that we spoke a lot about. It was a pink diamond, 16 carats, sold for $28.5 million. Number 2 on the list, it was a ruby and diamond ring by Cartier, 25 carats, sold for $30.3 million. But the number 1 on the list for 2015, and as we get ready for auction season to be coming our way very, very soon around the world, it was the Blue Moon of Josephine 13 carat blue diamond, sold for $48.5 million. In fact, a Chinese billionaire purchased number 1 and number 3 on our list, the Sweet Josephine Pink and the Blue Moon of Josephine, $77 million in total, and that was a gift for his daughter. Harold, we have about 2 minutes left. We know that we're heading into auction season. We're going to be getting an idea of, as we go into spring auction season, what diamonds are doing. We've touched on past shows, different indexes that are out there that are giving us an indication that colored diamonds are doing very, very well.
You bet they are. Again, very, very proud of what's happening in the diamond market. We're very heavy into it. Again, we have investments for our Canadian clients that are doing much better than the mainstream. We have clients that are making 25% a year plus with us. So if you're not doing well in your investments and you're concerned about, them moving forward, I speak to clients every day. Please give me a call. I'll definitely sit down over the phone with you and spend as much time with you need going over your personal portfolio and trying to help you get out of bad investments and try to direct you into the area that our clients are doing extremely well with. So, again, this is strictly for our Canadian clients, and all we want is for our clients to get through these difficult times and do well.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Take Harold up on his generous offers. Speak with him. The call is free, 1-800-432-1022. You can connect with him through his website, rarecoloreddiamonds.com. He will be happy to speak with you confidentially about your financial situation, what's happening in the world with a cashless society, possibly impending, negative interest rates around the world. Where do you make money in the economic times that we're in? Also geopolitically, very, very dicey times. Take Harold up on his offer. Speak with him. The call is free. The conversation is private. Our featured diamond of the week is a 1.30 carat cushion cut fancy light blue diamond. See it at rarecoloreddiamonds.com. And good luck to our Edmonton Oilers. The Oilers Face-Off Show, pregame show, is on the way next. That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.